Apple has a cash problem as it continues to mint money. The company has over $200 billion cash on its balance sheet, making it the first corporation to ever achieve this milestone. Its cash pile continues to accumulate despite aggressive efforts to get rid of it, which I know is a good problem to have. Apple is the most extreme example of cash surplus, but they are not alone amongst S&P 500 index companies. Its cash and investments of over $200 billion are staggering amount by any standard. For sure, they are trying to spend cash using both dividends and stock buybacks, but can't get rid of money fast enough. Last year, Apple spent roughly $80 billion buying its stock back, but is just a drop in rapidly filling bucket. Thus, its cash on hand rose in 2021 than the year before. Don't get me wrong, having too much money is not a big problem after all. Apple is one of the big American technology companies that have always been criticized for keeping most of their cash in subsidiaries abroad. Big corporations can afford expensive lawyers and accountants who can help them save tons in taxes using legal yet very complicated corporate structures in tax preferred foreign jurisdictions. Experts believe the company may be waiting for changes in the US tax code before they bring this money home to save on taxes. Its present rate of free cash flow will enable Apple to accumulate $250 billion on its balance sheet, which you will agree with me is a good problem to have. The real reason behind Apple's success is their product line and its ecosystem. Even though it is not the biggest phone maker, but they charge premium for its products, thus having large profit margins than its peers. Its App Store offers quality service for end users, but their service providers share 30% revenue with Apple, which is a recurring profit. Over time, they have been able to develop a sort of cult status amongst its users where its ecosystem of iPhone, iPad, MacBook, iTunes, Apple Pay, Apple TV, App Store, etc. plays a huge role. Companies in S&P 500 are hoarding cash which has reached mega proportions in recent times. Just 12 companies in the index accounts for nearly 40% of about $2.7 trillion cash accumulated. Apart from Apple, other big American corporations in the list are Alphabet, Microsoft, Amazon, GE, Meta, Pfizer, Coca-Cola, Ford, Intel, to just name a few. There are only two reasons why companies hold on to cash. First, they don't see lucrative investment opportunities in their business, and secondly, uncertain future or possible coming recession. Shareholders can benefit from Apple's cash in only two ways. First, dividends, and secondly, when they buy back stock. Since most of their cash is held overseas to lower their tax bill, they are using debt raised in the US for buybacks, which is a tax deductible expense, thereby increasing their profits even more. While cash accumulates overseas, Apple is adding debt in the US, which could be a smart accounting trick for taxation. They had raised money in the past where bonds were used to help finance $100 billion in dividends and share buybacks. Apple could buy a company to build another business vertical, but they are known to be very reluctant to take that route. Majority of Apple's cash is invested in medium to long-term secured assets like US Treasuries. Assuming they have put their money in 1-year US T-bills where the yield now is 4.75%. So hypothetically, yield on $200 billion if invested is about $9.5 billion per year, which is respectable from an year ago when the T-bills yields were not even 0.5%. I know with increasing interest rates, they'll have a little more return on their investments, but keep in mind to manage such a big portfolio, you need to have a whole investment team. Just as a side note, Apple is in the business of consumer electronics and not financials, and that is reflected in the multiples market is giving them. Looking at Apple's stock price during last 1 year, you might think maybe it is in trouble as the stock is down 27%. I would say that is just one side of the story. Looking at its financials, you quickly realize it is sitting on 200 billion in cash or equivalents on its balance sheet while generating huge amounts of free cash flow every quarter. It does have debt, but the cash is enough to pay that debt many times over. Having missed deliveries in a quarter does not indicate Apple is in trouble. Rather, if you have a long term investment horizon, it would seem like a little blip on its chart. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.